Jeswani now joining in to run us through what he's making of things. He's founder and CIO at Stallion Asset. Amit, welcome back. Always great to have you with us here on the program. Prashant here. Just what a day, right? I mean, rocking day with gains across the board. Large caps. Yesterday, mid caps and all were looking a little weakish, and actually a lot of pain there over the last couple of days in some pockets. But seems to be back again. I wanted, before we get to what you own, Amit, I just wanted your thoughts on this entire PSU space. I mean, take Cochin Shipyard as an example. The high was $3,000, fell to about 1,600, and you know, it's back at about 1,800 rupees now. Look at so many other names, right? Garden Reach, and those are just shipbuilders, but many other names as well. What's your sense? Are we finally seeing a rotation? PSUs have been the leader of this bull market. Are we seeing some rotation away from there?
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, you're absolutely bullseye right. There's a sector rotation happening. The PSU trend started after March, after the war in Russia. In March to June 22, we are 2 years in the trend, and typically trends last for 18 months to 24 months. And you've seen that before with chemical, pharma, IT, they all topped in 2021, and it's taken them 2 years to come back. The sector has reversed. The trends have reversed. You have to find newer trends. Newer sectors will start making new highs. Of course, we never had positions in PSUs before, but we don't have positions now also, so we don't have anything to worry about. But overall, the markets are going in every 2 years. There are new sector rotations happening, so the market doesn't become a bubble. There are always over-owned sectors and under-owned sectors, and there's like some kind of neglect, and some earnings growth in these under-owned sectors gets you a lot of price action. And that is what the markets are doing, and you just have to do what the markets are telling you to do.
Amit, hi. Great to be speaking with you again. I remember our last conversation, right? And as always, you're very spirited about telling us that you're willing to pay for growth. I mean, as long as there's solid growth coming in and good visibility. The problem is that the sectors that are now, coming back in focus because of this rotation, they're still not showing great growth, whether it's staples, whether it's IT, whether it's banks. It's all fairly anemic, right? At least right now, given the evidence that we have. So are you interested in any of it?
We are interested. We keep thinking, when do we get in? We just need one confirmation of earnings growth, and that is where we get in. But for now, the numbers are a little weak. Financials last quarter was extremely weak, and we find it tough to get in. But the screen is telling us, and when the entire sector makes a new high together, and you have numbers, see, we chase earnings. At the end of the day, for us, we don't believe in narratives. We don't believe in where the money flow will go. For us, if earnings are there, that gives us margin of safety, that gives us like ability to hold on, and when we get that, we will go in financials also. Actually, in our portfolio, we've got around 14-15% capital markets and 10%, 11% real estate. So we already have 25% of high beta in our portfolio. And Nifty 500 financial services is 31%. So we are not in financial services, but we're not in the lending side of businesses. We are more on these sides. But when I look at numbers, what my companies are showing, but versus what financials will show, I still feel that we should do better. But we can change. We will have to add financials to our portfolio because we have literally near less than 1-2% financials like lenders in our portfolio. But very few ones have that growth and valuations what we want. Like the good ones like Chola, etc., are already expensive. And then now we'll have to go on the second tier ones, and not second tier, like super high quality ones only, but we'll have to find new names. We are already looking at it. In fact, today itself, me and my team members in the morning were saying that if you launch a financial fund today, we don't do all this, we don't do this marketing business. We have only one fund, but if you launch a financial fund today, you should make around 100% in 2 years if you're good enough.
Wow, that's a big statement, huh? And I think the market's going to pay attention because you've developed a knack of picking stocks that will show that kind of, delta or alpha, given the fact that you got into trends so early on, right? So just to explore that point a little further, Till now, on the financial side, I think you've been in some names like Bajaj Finance. You've had Policy Bazaar, which obviously did so well. What is the evidence that you're looking for? What is that inflection point for lenders? Because you're saying that's where the next big money is going to be made. You're saying 100%, right? So what is that evidence that will convince you?
So 6, 8 months, 9 months can be good for capital markets also. I think we should make 50% in capital markets first because they are 12 months in the trend, and that is where the earnings growth will be the highest. The financial lending trend, I'm not 100% sure yet. But you don't make bets when you're 100% sure. You start making bets when you're 70, 80% sure. If today HDFC makes a breakout, so HDFC is at 2.7 times price to book. If that makes a breakout above and starts making new lifetime highs, that's around 1,800 rupees. And if it sustains there, I would say that financials for last 2 years, they've consistently been the worst performing sector. If I start seeing disbursement growth, last quarter disbursement growth was horrible. AUM growth was horrible. So that is why we don't have any interest yet in lenders, but we are looking at it. And I will tell you, when we buy something, we don't have any exposure right now. But if I think that sometime between now and the next quarter, if earnings are good, wherever earnings are good, this is where you become, the screen is telling you that something big might happen this quarter. We don't have confirmation. We need earnings confirmation, and then we get in. But something to look out for.
But when you say if you launch something now, it should be up 100% by in a year, Amit.
No, 2 years, 2 years, 2 years, not in 1 year. In a year, I would have lost it.
Stocks are up 40, 50% in a month. I mean, it's just that kind of a market. But so you already have some names, some ideas in your mind, right?
So we
HDFC
have
is maybe one of them.
Actually,
HDFC Bank, yeah.
The HDFC Bank we wouldn't buy.
Okay.
My number one holding would not be HDFC Bank. If we launched some, I would have.
Let's talk about this hypothetical fund. Hypothetical for now. What would it have?
I would have my number. I will tell you. Let me finish my buying.
Okay.
There is one health insurance company which is very good. It's the market leader, 33%, 32% market share. It's extremely reasonable. There are so many names.
Star Health.
I'm just giving an example. It's like across that entire space. I think we already have in Stallion's current portfolio, like stocks are not recommendations. We are a PM trying to have vested interests. My family has vested interest. We keep trading very aggressively, buying, selling all the time. But if you look at BSE, I think today, last year profits, like adjusted, like normalized profits of BSE was 400 crores. If this once a week settlement happens, the profits can be secular to 2,500 crores in 2 years. So that can be a very big trade, I think. So you want to look at large changes of earnings. Now, this is based on if the regulation happens at 1 week NSE and 1 week BSE expiry options. If you see NSE option revenues are near 9,000 crores. That's what analysts say. 16,000 crores, 16,700 crores is total NSE revenues. These are changes. You have to bet on large changes which can change.
Amit, I just want to, sorry, if it is one contract per week per exchange, most are saying it actually perhaps it gives a bit of a boost to BSE. Yeah, that's correct.
A massive boost. Actually, if you see NSE index options does 9,000 crores of revenues. BSE does 100 crores a month. That is 1,200 crores of option revenues. So the total revenues of BSE is around 1,000 crores. This is 9,000 crores for NSE. If you think 10,000 crores is the total revenue. If you think BSE after one expiry a week will become 30% of the market, then your revenues, which is 1,200 crores, will move to 3,000 crores. If you think it will become 40% or 50%, whatever you want, it will become 4,000. Now there is no additional large cost which increases. So your profits, so revenues of BSE in FY24 was around 1,600 crores. My apologies, I'm not able to get to, but 1,600 crores can become a very large number. Your revenues can go up like this year itself. Regardless of last quarter, they made profits of 267 crores. This quarter should be around 280, 290 crores. So broadly, they'll end the year at around 1,100 crores. And if you get, without change of anything, right now market cap would be around 12.5 crore shares. About 550,000 crores will be market cap of BSE and right now. But if you see that if the change happens in 2026, in this, what happens typically in this is not like it's after 1 year market share change will happen. In 1 week itself or 1 month itself, that speculators will move to one exchange and boom, your market share change happens and your change of expectations, change of earnings happens. And when that happens, hopefully we make some money.
No, so what is, you'll have some number, right? What could profits be next for estimated profits?
I don't want to say it on national television, Prashant, but it's a very large number. I can tell.
No, why not? I mean,
we have scenarios. We have scenarios that we are building in, and if those
their profits were 772 crores last year.
There's another income also of 500 crores as another income net of tax. I think profits normalized was 450 crores last for BSE. This year, in the first quarter, I'm just saying from memory, I can be wrong a few points, please. But I think by memory, the profits first quarter was 267 crores. This quarter, they should be around 270, 280 crores, 290 crores, in that range. But Q3, Q4 should be good, yeah. Typically, I think they will do around 1,100 to 1,200 crores profit this year. But this is not the year where that change of, I'm not expecting that change of regulation to happen. The change of regulation will happen FY26, where the complete impact happens. And when that happens, you don't know what kind of incremental revenue will come. But you know, there's a high probability of that happening. And we have taken
Amit, I take the enthusiasm on board, but just to complete a point, I mean, you have BSE, so that's fine. Isn't a lot of this already captured in the huge stock price surge? Is there any point getting in now?
Yeah, I got in at 3,400 only, actually.
Okay.
So I also bought after the breakout happened. Actually, the first move of BSE from 900 to 3,500, 3,200, we never participated. We had MCX in our portfolio, which we bought at around 2,000. We still have MCX. It is now at 5,800. So we made 3x, but someone else who bought BSE made 4x. So we were sad that we couldn't. But now I think it fits our framework where market share change will happen. NSE, which was a monopoly, it will become a duopoly structure. If we get it right, if we go wrong, we will lose money and come out. For us, it's not a big deal. We have 25 names and we keep going wrong, right all the time.
Yeah, but more right than wrong, I suppose, given the list that he has, which includes Zomato. We've not even discussed consumer this time.
I'm curious to know how much is Amit's portfolio up today, because the other stock which Amit owns is Novama, which is now almost 7,000 rupees. So that has been that's been a wealth creator for you as well, I'm sure. Amit, I see a few.
There's a block coming that will determine everything.
Yeah, I mean the Edel block, right?
Yeah, the Edelweiss, they have already disclosed in public that there's a block.
I think post the lock-in ends on 25th or 26th. So yeah,
yeah. So if that block happens, that will give us a very good this thing, because Nuvama last quarter profits were 220 crores. This quarter should be very decent. We have vested interest in everything that I'm speaking. Do not buy these stocks. Just understand what we are trying to do.
Yeah. No, I get that. I see. So these names, I think I see Yatharth. You own, is that a new addition? I see Tips Industries. There is Red Tape. These are all, we not discuss these. Yeah.
Red Tape we bought before the demerger is already up 3x for us in last 1 year.
Okay.
Yatharth we got in this. It's a very small 1.5% kind of position. We got in this quarter. My team likes it. It should do around 160 crores PAT. We bought it around 44, 45, 4,300 crores market cap. So we bought it, and it's a very cheap company. This last quarter it grew at 37%. This quarter it should grow at around 30%. So it's got the highest growth in the hospital business, low valuations, and like at 27, 28 times we bought it. So we keep doing.
And Tips, Amit?
It's also growing at 30%, ROCs of 100%.
It's a recent addition, or?
Yeah, we bought this quarter only. This quarter.
Oh, this quarter.
So we were selling our PB FinTech, our PG, like we were not cutting, we're cutting weights in PB FinTech. We were cutting weights in PG Electronics, we bought PG Electroplast, we bought at We more than doubled in a quarter. So we have to give it back and book profits and find something else. So we keep doing these kind of things, Prashant, where wherever there is higher rewards, that is where, and lower valuations, we keep moving there. But tips we bought, yes, this quarter. Like we bought this quarter only, but that because Torani Saab said he will grow at 30%. Profits of this quarter is higher than that of Saregama. And so we bought, but tips we like as a business. If you grow, and this is free cash flows. Tips is 100, like whatever profits you're seeing is free cash flow because content cost.
Yeah. I mean, just very quickly, apart from PB Fintech and Electroplast, have you taken profits anywhere else? Trend, Zomato, a lot of those other high flyers for you? Just to wrap up the conversation.
I would be cutting here and there. We keep cutting. We sold Domes at 2,800. Around that, we bought it at 1,1700. We took some money out at 2,800. See, money is always limited. We always have ideas. So for us, in our cricket team, we also have to see that who's going to be our opening batsman, who's going to be our...
Maximize, yeah.
So we
Maximizing returns, right?
And if it's giving you opportunities to make 60-70%, 80% in a quarter, 2 quarters, you make that money and move to the next opportunity, and you keep doing that till the time you have opportunities. You see, in a bull market, you have to change your net worth, and like you need to try. My portfolio beta is low. You buy good quality companies only, but we don't buy dirty companies or bad quality. We never had all those cyclical, etc. We buy high quality companies. But your goal is that at the end of the bull market, you need to change your net worth in a very big way, and minus 10% tak, niche tak ke baad, you will come to know that the bull market is over. Before that, you will never come to know. And you keep riding and keep trying to make most of this bull market. But if you don't change your net worth in this bull market, then it's very tough.
Yeah, no, absolutely. And hopefully we have this continuing for some time, right? We're not on borrowed time, hopefully. Thank you very much, Amit. It's a pleasure. Appreciate you joining in. Great conversation and great insights, as always, here on CNBC-TV18. Well, let's focus on